Alright, let's talk about Bitcoin. You've probably heard of it. It's that digital stuff, that internet money, that thing your nephew won't shut up about at Thanksgiving. Now what is it really? Imagine money, like the dollars or pounds you have in your wallet. Or more likely, the numbers you see in your online bank account. Bitcoin is a bit like that, but it's entirely digital. There are no Bitcoin bills you can accidentally leave in your jeans pocket before laundry day. There are no Bitcoin coins you can lose under the sofa cushions, thank goodness. It exists only on computers, a long string of code basically. Now, unlike the traditional money issued by governments like the US dollar, which is managed by the nice folks at the Federal Reserve, or so they tell us, Bitcoin is different. It's decentralized. That's a fancy word meaning no single bank, no single government, no single person controls it. It's run by a network of thousands of computers all over the world. Think of it like a giant public spreadsheet that everyone can see, but no single entity can secretly alter. This spreadsheet, called the blockchain, keeps track of every Bitcoin transaction ever made. It's all out in the open, which is part of its whole appeal, or so the enthusiasts claim with wide, hopeful eyes. So, how do you get this Bitcoin? Well, you can't just print it out like your boss prints out motivational posters that do the opposite of motivate. You can mine it, which involves using powerful computers to solve complex mathematical problems. Or, and this is what most people do, you can buy it on special online exchanges using your regular, old-fashioned money. You store it in a digital wallet, which can be on your computer, your phone, or even a special USB stick. It's like having a bank account, but instead of a grumpy teller, you have cryptography, which sounds much cooler, admittedly. The whole idea was cooked up in 2008 by someone, or some group of people, called Satoshi Nakamoto. And here's the kicker. Nobody knows who Satoshi really is. Vanished. Poof, gone, like a good night's sleep after you start worrying about the global economy. This mystery only adds to the Bitcoin allure for some, while for others, it's a massive red flag waving vigorously. But regardless of its shadowy origins, Bitcoin has stuck around, becoming the most well-known and, as we'll see, often the most valuable of these newfangled digital currencies. It's the OG, the big cheese, the one that started this whole digital gold rush. So here we are, May 21st, 2025, and guess what? Bitcoin has apparently decided to throw another one of its spectacular parties. Yes, reports are flooding in that Bitcoin has smashed through its previous price records, hitting a new all-time high. Imagine a really enthusiastic rocket, but instead of carrying astronauts, it's carrying the hopes and dreams of people who bought Bitcoin when it was cheap. And possibly also the anxieties of those who bought it at its last peak, just before it decided to take a nosedive. It's a roller coaster, this Bitcoin thing, an emotional theme park designed by a sadist with a keen interest in financial markets. What does a record high actually mean? Well, it means that if you were to sell one Bitcoin today, you would get more good old-fashioned dollars or euros or whatever your local currency is than ever before in its entire history. This makes people who already own Bitcoin very happy. They might be refreshing their crypto apps every 5 seconds, possibly letting out small yelps of joy, much to the confusion of their pets. For those who don't own any, it might spark a severe case of FOMO, fear of missing out, a condition that seems to fuel a significant portion of the modern economy. Should I buy now? They wonder, staring at the charts. This isn't the first time Bitcoin has done this, of course. It has a history of these dramatic climbs, followed by equally dramatic falls, then sometimes another climb. It's like a financial yo-yo, but one that could potentially pay off your mortgage, or, alternatively, leave you with nothing but digital dust and regret. The significance of this new high is that it reaffirms Bitcoin's resilience in the eyes of its supporters. Every time it crashes and people say, "That's it, it's over for Bitcoin," it seems to eventually claw its way back, thumbing its digital nose at the naysayers. This current surge is another chapter in that ongoing saga. The news is buzzing. Financial news channels are probably having a field day, bringing on experts to explain what it all means, many of whom will offer completely contradictory predictions with unwavering confidence. Social media is likely a frenzy of rocket emojis and HODL memes. That's crypto speak for holding onto your coins for dear life, even when the price is doing a terrifying tango. This record high as of May 2025 will undoubtedly draw in a fresh wave of curious newcomers, eager to understand what all the fuss is about, and perhaps, just perhaps, to get a piece of the action themselves, for better or worse. Now you might be wondering why. Why is Bitcoin's price suddenly shooting up like a startled cat? What's causing this fresh wave of enthusiasm, or as some might call it, speculative mania? Well, there isn't usually one single simple answer. It's often a cocktail of factors, a messy blend of economics, psychology, and sometimes just sheer unadulterated hype. One of the most basic reasons is good old supply and demand. There's a limited supply of Bitcoin, only 21 million will ever exist, that's baked into its code. So, if more people want to buy it than sell it, the price naturally goes up. It's like trying to buy concert tickets for a super popular band. The fewer tickets available, the more people are willing to pay. Another key ingredient in this price hike pie is increased awareness and adoption. Bitcoin has been around for over a decade now. It's not quite as mysterious as it once was. More people understand, or at least think they understand, what it is. News of a record high, like the one we're seeing in May 2025, acts like a giant flashing advertisement. It gets people talking, it gets media coverage. Your cousin who once dismissed it as nerd money might suddenly be asking you how to buy some. This increased visibility can lead to a snowball effect. Rising prices attract more buyers, which pushes prices even higher. Then there's the media. Oh, the media. When Bitcoin's price is soaring, it becomes a hot topic. News outlets, financial bloggers, YouTube gurus, they all jump on the bandwagon. Positive stories, tales of people getting rich quick, they rarely mention the ones who lose their shirts, can create a powerful narrative. This narrative can influence public sentiment, making people feel more confident or perhaps more greedy about investing in Bitcoin. It's a feedback loop. Hype drives price drives more hype. And let's be honest, who doesn't love a good story about sudden improbable wealth? Finally, let's not forget the power of belief. For many, Bitcoin isn't just an investment, it's a movement. It represents a new way of thinking about money, free from government control and traditional financial institutions. When this community of believers grows, or when their conviction strengthens, it can translate into increased buying pressure. They're not just buying an asset, they're buying into an idea. And when an idea gains enough momentum, it can have a very real impact on market prices, especially for an asset as sentiment-driven as Bitcoin often appears to be. It's a fascinating and sometimes bewildering intersection of technology and human emotion. Beyond the general buzz and basic economics, there are often more specific, perhaps more serious-sounding reasons why big players and even regular folks might be piling into Bitcoin. One major factor often cited during these bull runs is the increasing interest from institutional investors. We're talking about big companies, investment funds, pension funds, the kind of entities that manage enormous pools of money. For a long time, these big fish stayed away from Bitcoin, viewing it as too weird, too volatile, too unregulated. But that attitude has been slowly, and sometimes rapidly, changing. It's like the cool kids at school suddenly deciding the nerdy kid is actually all right. When these large institutions start allocating even a small percentage of their portfolios to Bitcoin, it can have a massive impact on the price. They're not buying a few $100s worth, they're buying millions, sometimes billions. This not only directly pushes up demand but also lends an air of legitimacy to Bitcoin. If the smart money is getting involved, some individual investors think, maybe there's something to this after all. It signals that Bitcoin might be maturing from a niche internet curiosity into a more mainstream financial asset, or at least that's the hope for many involved in the space. Another popular narrative, especially in times of economic uncertainty, is that Bitcoin acts as a digital gold, a hedge against inflation. You know inflation, right? It's when your money buys less stuff over time. Central banks can print more money, potentially devaluing it. Bitcoin, with its fixed supply, is seen by some as a way to protect their wealth from this erosion. So, if people are worried about rising prices or their government's monetary policy, they might turn to Bitcoin as a store of value, much like gold has been used for centuries. This argument gains particular traction when traditional markets seem wobbly. Technological developments within the Bitcoin ecosystem or broader crypto space can also play a role. Perhaps there's news about upgrades to the Bitcoin network making it faster or more efficient. Or maybe new financial products are launched that make it easier for people to invest in Bitcoin, like exchange-traded funds, ETFs. These developments can boost investor confidence and attract new capital. Regulatory clarity, or even just the anticipation of favorable regulations in key markets, can also reduce uncertainty and encourage investment. It's a complex dance of innovation, market sentiment, and the slow, grinding gears of institutional acceptance. Section 5. And then there's XRP, the other coin making headlines. Now, just as you were getting your head around Bitcoin, or at least pretending to, let me throw another name into the mix, XRP. Yes, while Bitcoin has been hogging the limelight with its spectacular price surge to a new record high in May 2025, another digital coin, XRP, has also been quietly, or not so quietly, making some impressive gains. It's like Bitcoin is the headline act at a music festival, and XRP is the surprisingly good support band that everyone starts talking about. This isn't uncommon in the world of cryptocurrencies. When Bitcoin does well, it often creates a positive wave that lifts other digital assets along with it. So what's the deal with XRP's recent price pump? Well, according to reports, alongside Bitcoin's stellar performance, XRP has also seen its value increase. This suggests that the good mood in the crypto market isn't just a one-coin party. Investors might be feeling more confident about digital assets in general, and that optimism is spilling over. It's important to remember that the cryptocurrency market is a vast ecosystem with thousands of different coins and tokens, each with its own purported purpose and technology. XRP is one of the older and more established players in this field, though it has certainly had its own share of drama, particularly with regulators. The fact that XRP is gaining alongside Bitcoin could mean a few things. It could be a sign of a broader market rally, where investors are looking for opportunities beyond just the biggest name. Sometimes, when Bitcoin becomes very expensive, people look for other, cheaper coins, hoping they might offer better percentage gains. A riskier strategy, of course, but one that attracts many. Or there might be specific news or developments related to XRP itself that are contributing to its rise, independent of Bitcoin's fortunes, though often the two are intertwined by overall market sentiment. It's crucial to understand that XRP is a different beast from Bitcoin. They have different goals, different technologies, and different communities behind them. While Bitcoin aims to be a decentralized digital currency and store of value, XRP is more focused on facilitating fast and cheap international payments for financial institutions. Think of it as a specialized tool for banks, while Bitcoin is trying to be a new form of money for everyone. Understanding these differences is key before anyone gets too excited by rising prices of any particular digital coin. We'll delve a bit deeper into what XRP actually is next. Section 6. XRP, not just another Bitcoin knockoff, or is it? Alright, so we've established XRP is also having a bit of a moment, price-wise, but what exactly XRP? Is it just Bitcoin wearing a different hat? Not quite. While both are digital assets that live on things called ledgers, their philosophies and intended uses are quite distinct. XRP is the native digital asset of the XRP ledger, which was developed by a company currently known as Ripple. Yes, a company. This is a key difference from Bitcoin, which, as we discussed, has no central company or figurehead pulling the strings, aside from its mysterious and absent creator. The primary goal of Ripple and the XRP ledger is to enable fast, reliable, and very low-cost international payments. Think about sending money across borders right now. It can be slow. It can be expensive. It can involve multiple banks taking a cut along the way. It's a bit like sending a message by carrier pigeon, but the pigeon stops at several toll booths. Ripple's idea is that banks and payment providers can use XRP as a sort of bridge currency to make these transactions happen in seconds, not days, and for fractions of a cent. So instead of your bank needing to hold accounts in many different foreign currencies, it could theoretically use XRP to facilitate the exchange quickly. This focus on working the existing financial system rather than trying to completely replace it, sets XRP apart from the more anarchic anti-establishment vibe of early Bitcoin. Some hardcore crypto purists look at XRP with suspicion precisely because of its ties to banks and a central company. They see it as centralized or corporate coin, which in their view goes against the core principles of what cryptocurrency should be. On the other hand, proponents argue that this pragmatic approach is exactly what's needed for real-world adoption by the institutions that handle the bulk of global money movement. It's also worth noting that all XRP that will ever exist was created at the inception of its ledger, 100 billion tokens. A large portion of this was, and still is, held by Ripple, the company, which periodically sells some of it to fund its operations or support the ecosystem. This is another point of contention for critics, who worry about the company's influence over the supply and price. So, while XRP is a cryptocurrency, its structure, governance, and goals are tailored for a very specific use case within the financial industry, making it a very different proposition from Bitcoin's aim to be a peer-to-peer electronic cash system for the masses. Section 7. Bitcoin and XRP. Are they holding hands or just in the same parade? So, we've seen Bitcoin hit a new high and XRP is also enjoying a nice little price bump. This naturally leads to the question, are these two connected? Is XRP just riding on Bitcoin's coattails like a younger sibling trying to keep up, or is there something more to it? Well, in the often chaotic and sentiment-driven world of cryptocurrencies, the answer is usually a bit of both, with a healthy dose of its complicated sprinkled on top. It's rarely a simple cause and effect relationship, more like a complex dance where many partners influence each other. Often, Bitcoin acts as the market leader, the bellwether for the entire crypto space. When Bitcoin's price goes up significantly, it tends to create a positive sentiment across the board. This is sometimes called the Bitcoin dominance effect. Investors see Bitcoin soaring and might think, aha, crypto is hot right now. This can lead them to invest not only in Bitcoin but also in other digital assets, known as altcoins, alternative coins to Bitcoin, like XRP. It's like a rising tide lifting all boats, or at least most of the reasonably seaworthy ones. So yes, a strong Bitcoin performance can definitely give a boost to XRP and others. However, it's not just a one-way street, and XRP isn't solely dependent on Bitcoin's mood swings. XRP can also have its own specific catalysts that drive its price, independent of what Bitcoin is doing. For instance, positive news about Ripple, the company associated with XRP, such as new partnerships with financial institutions, favorable developments in its ongoing legal battles, which have been a significant factor for XRP in the past, or technological upgrades to the XRP ledger, can all cause XRP's price to move. If Ripple announces a major bank is adopting its technology, you can bet XRP investors will sit up and take notice, regardless of Bitcoin's daily chart. Furthermore, the correlation isn't always perfect or consistent. There are times when Bitcoin might be rallying, and some altcoins, including XRP, might lag behind or even go down, and vice versa. This can happen if there's negative news specific to that altcoin, or if investors are shifting capital from altcoins into Bitcoin, perceiving it as a safer bet during certain market conditions. The crypto market is highly interconnected, but it's also very fragmented, with different assets responding to different narratives and triggers. So, while Bitcoin often sets the general tone, individual coins like XRP still dance to the beat of their own drums to some extent. Section 8. Before you remortgage your house, a word of caution. Now, seeing all these headlines about Bitcoin hitting record highs and XRP making gains, you might be feeling that familiar tingle. That little voice whispering, maybe I should get in on this, to the moon. And look, the excitement is understandable. The prospect of making quick, substantial profits is always alluring. However, and this is a very big however, before you even think about raiding your emergency fund or selling a kidney, please don't sell a kidney, it's absolutely crucial to talk about the other side of the coin, no pun intended. Cryptocurrencies, including Bitcoin and XRP, are incredibly volatile. What does volatile mean? It means prices can swing wildly up and down, often without any apparent warning or clear reason. That record high Bitcoin reached today? Fantastic for those who bought low, but there's no guarantee it will stay there or go higher. It could just as easily and very quickly drop significantly. We've seen it happen many times before. The crypto market is notorious for its sharp corrections and prolonged crypto winters, where prices stay low for ages. So, while the journey up can be exhilarating, the journey down can be financially and emotionally devastating if you've invested more than you can afford to lose. This isn't like putting your money in a boring old savings account at the bank, where you get a tiny bit of interest and your principal is generally safe. Investing in cryptocurrencies is speculative. That means it's risky. Very risky. You could make a lot of money, yes. But you could also lose a lot of money, potentially all of it. There are no government guarantees protecting your crypto investments if an exchange gets hacked or a project fails. You are, to a large extent, on your own. This is the wild west of finance, and while there are fortunes to be made, there are also plenty of digital tumbleweeds and bandits. So, the golden rule, the one you should tattoo on the inside of your eyelids if you're considering this, is never invest more than you can comfortably afford to lose. Do your own research. Don't just listen to some guy on YouTube or your enthusiastic nephew. Understand what you're buying, the technology behind it, the risks involved. Be skeptical of anyone promising guaranteed returns. If it sounds too good to be true, it almost certainly is. The crypto market can be a fascinating and potentially rewarding space, but it demands caution, education, and a very clear understanding of the potential downsides before you dive in. Section 9. The future of these digital dollars, crystal balls and question marks. So, Bitcoin's hit a new high, XRP's tagging along for the ride, and the crypto world is abuzz once more. What does this all mean for the future? Are we on the cusp of a new financial revolution where digital currencies replace our boring old cash? Or is this just another speculative bubble waiting to pop, leaving a trail of tears and regret? Well, if I had a crystal ball that could accurately predict that, I'd probably be on a private island right now, not explaining cryptocurrencies to you. The truth is, nobody knows for sure. But we can look at some possibilities and ongoing debates. One vision for the future, held dear by crypto evangelists, is that digital assets like Bitcoin will become increasingly mainstream. They see Bitcoin evolving into a globally accepted store of value, like digital gold, and perhaps even a widely used medium of exchange. For assets like XRP, the hope is that they will fundamentally reshape specific industries, like international payments, making them faster and cheaper. In this optimistic scenario, the technology underlying these assets, the blockchain, will unlock new innovations in finance, art, gaming, and countless other fields. It's a future of decentralization, transparency, and empowerment, or so the story goes. However, there are significant hurdles and question marks hanging over this shiny digital future. Regulation is a big one. Governments around the world are still figuring out how to deal with cryptocurrencies. Will they embrace them, try to control them, or ban them outright? The answers will vary, and regulatory uncertainty can create a lot of volatility and stifle adoption. Then there are the technical challenges, scalability. Can these networks handle millions of transactions per second? Security hacks and scams are still rampant, and user-friendliness. Let's be honest, using crypto can still be pretty complicated for the average person. And of course, there's the ever-present question of intrinsic value. Critics argue that many cryptocurrencies have no real underlying value beyond what people are willing to pay for them, the greater fool theory. They see them as purely speculative instruments, prone to bubbles driven by hype rather than fundamentals. While the technology is interesting, they question whether these specific digital coins will be the long-term winners, or if they'll eventually be replaced by something better, perhaps even government-issued digital currencies. The debate between believers and skeptics is likely to continue for a long time. Ultimately, the future of digital assets like Bitcoin and XRP is still being written. This recent surge in May 2025 is another exciting or perhaps terrifying chapter. Whether these assets will truly transform our financial world or fade away as a curious experiment remains to be seen. What is clear is that they have sparked a global conversation about the nature of money, the role of technology in finance, and the potential for new economic paradigms. And that, at least, is undeniably interesting, even if you decide to watch this particular roller coaster from a safe distance.